All right, number 7, the QBID. So those are my business owners there. Again, this is a big extension. It's super helpful when you actually qualify for it. Now, I'll call your attention to the bottom, and I think this kind of helps a little bit with understanding something called a specified service trade or business versus a non-specified service trade or business. So just think service. In this column here, this would be where Financial Harvest sits, because we are in wealth management. If you're in tax, if you're in law, if you're in consulting, they consider you service-based, and you don't get to partake in this nice qualified business income deduction if your income is too high. But I'll call your attention over here. Think real estate developers. They could be making millions and millions, billions of dollars, and they can actually participate where they deduct 20% of their profits. Just comes right off of the tax return, and they don't have to pay tax on that. So that's still, this has now been made permanent. It's extending out into 2026. Now, for our service-based business owners, there's a phase out. So what happens is once your income hits a certain level, they start to take away the ability to use this QBID. And notice for married filing jointly, key distinction here, it's based on your taxable income. And then once you hit 500,000, you can see it starts to reduce that QBID, and it completely phases out at 650,000. So many of you are already thinking, all right, light bulb here. How can I get my taxable income below 500,000? Now, I'm not, advocating for working, less hard or something like that, or not as hard. But is there planning opportunities that we can get our taxable income down to where we can benefit from this QBID? I'm so glad you asked. So I wanted to do an example. So let's say that I'll just use Katie and me as an example. So let's say that we have, I'll use 600. So let's say that we have 600K of AGI, and then of that, 300 of it is from the business NOI, the profits from the business, just for an example here. So of that 600,000, we're getting phased out. So we're not able to use the full extent of the QBID. Well, remember, this is taxable income. So what if Katie and I said, you know what? We want to do a $100,000 charitable deduction. And so when we give 100,000 to charity, it brings our taxable income down to 500. So now we're getting the full QBID, which is 20% on this guy, right? So that's going to enable an extra $60,000 deduction. Now we would get some down here, but on the charitable deduction, it's a 35% bracket. And then now we're picking up additional deductions also at 35%. So we're getting 35% savings here, plus another probably somewhere around, 8 to 10% over here because of this new deduction. When you add this together, you're sitting at somewhere around like 45% savings, maybe 40 to 45. So this charitable deduction really starts to amplify. So just an example I want to toss out there, small business owners, hey, I'm getting phased out. Maybe we start doing some planning on itemized deductions. How can we pull that taxable income to where you get to benefit more from the QBID?